folks are basically wary of holding paper gold, exchange traded funds or future contracts. Why?
The fear always is that you buy an exchange traded fund and it says you have an ounce of gold or the equivalent, but actually that they don't have the ounce of underlying gold. So when you come to redeem it, and they don't have it to sell and to give you the dollars, then they're exposed, and if that causes them to go bust, and it can happen, particularly if there is volatility in the gold price, then you may not have the underlying security that you have probably bought gold for. To my observation, if you read the detailed small print of some of these ETFs, some of them will say, well, you know, you put in $1,200 an ounce and we will buy an ounce of gold and that's all there is to it. Some of them will say, you put in $1,200 and we will buy an ounce of gold, but if we can't do that, we'll do something in the derivatives market, some way of creating a synthetic form of gold. And when a company's underlying backing for their paper goes out of kilter, it's not by and large through any motivation to defraud investors. It's just because they weren't able to buy it in the market in the normal course of events anyway. So quite often I don't see it as a fraud. However, it is a risk for investors and they do need to be aware of it. And you know, unfortunately you come down saying, well, the only answer is to read the small print, which is quite a tiresome thing to do. The other alternative is actually to buy bars and coins yourself and put them in a safety deposit or put them in a safe place somewhere.
That's what I was going to ask next. I mean, is buying bullion or coins a good way of doing it?
Yes, it is. There are obviously scale factors relating to that because there is a security cost. So you have to think, and possibly there may be no security cost if you're just buying 1 or 2 ounces of gold or something. You can maybe secrete them about your house, and if you don't tell anyone, then you can probably secrete them in such a way. But you get a medium-sized problem where you have, let's say, a small bar. It's not worth paying the money for security on it, but you're not happy having it around your house. Obviously, that's a problem. You know, at the large scale, obviously, you've got such a large amount of gold, and then the cost of security is quite small relative to the value of that gold. So, so yes, if what you want are the insurance functions of gold and the security and the fact that it's an asset that holds its value, then probably you can't do better than buying the physical. Whether it's efficient or not will depend on how much you're buying and what your security arrangements are.
We touched earlier about buying tangible asset gold rather than paper. Who would you recommend? I mean, American Eagles, Krugerrands, Maple Leaf, bullion. Any preference?
No, not between those. There are a number of reputable bullion dealers. The thing you should always remember is that you should be buying the gold for its intrinsic value. You don't want to start paying a premium because you think it's a special coin. If you do that, be aware of the fact you're not really trading in the gold market anymore. You're trading you're in the numismatic market, and what you're looking at is rare coins. So you should take the weight of gold, you should multiply it by the gold price, and that should be pretty close. All right, a little bit of margin for the retailer, but it shouldn't be a lot.